Welcome back. There is some buying interest emerging from the lower levels for the markets, at least. The Nifty is at least 20 to 30 points off the lows of the day, back at 26,260. And Nikunj Doshi from Bay Capital joins in now to talk markets and a lot more. Nikunj, good morning. Thank you for joining in. I'd like to talk not specifically to those stocks, but the new listings that have come out recently, be it Lenskart, be it Grow, be it Physicswala. The basic conversation around all of them have been how they have been valued. For a lot of them, at least for Grow, it's profitable. But for a lot of the other companies that are coming out or have come out, they are still loss-making. They have just recently turned profitable. Do they justify the kind of valuations that they are commanding? And how forward do you extrapolate that multiple, hoping that they would eventually turn profitable 3-4 years down the line?
See, again, valuation for digital first companies, I would say is a lot depends on the expectation of growth. So even though if they are making losses, but the initial cost of client acquisition is very high for these companies. And that's where they incur cost in acquiring clients, and that actually creates losses in the beginning of the businesses. But as and when the number of clients improves, there's a huge operating leverage which plays out in all these digital first companies. And I think that's what people are factoring in when they project for, say, next 3 to 5 years. And you look at 3 to 5 years roadmap at least for these companies. And when the hyperbolic profitability growth kicks in, that is the time you expect the values to go to PE multiple levels rather than the story level. So at present, it's more of a story and less of a price earning multiple. But going forward, after 3 to 5 years, people start looking at PE, and that's where the valuation is benchmarked today.
All right, Nikunj, the big macro, data after the GDP that the markets will be taking cues from is what happens on Friday, with the RBI policy. How are you going to play the markets ahead of that, and what are your expectations?
See, I think if we look at inflation, which is a key monitorable for the RBI, it's under control. GDP growth, if you look at real GDP growth, that's good. But nominal GDP growth, I would say, because of the deflationary factor, is still, I would say, lower than expected. So I think RBI will go ahead with rate cut in this policy. And perhaps that will help growth going forward. And government, if we look at all the decisions that the government is taking, they are focusing on the growth of the economy and of the corporates because they want to encourage private capex happening in the economy. So I think we expect at least a quarter basis point rate cut in this RBI policy. And that would be positive for the market.
By the way, the rupee has hit a fresh record of 89.59 against the dollar now. This has been the year where India's underperformance versus the global markets, the range of underperformance is the widest that we've seen in more than a decade. It's also the year in which the rupee has been the worst performing currency in the Asian market. And now you are seeing, and it's a very sharp fall coming through. Just in the last 10 minutes or so, it's 89.59 on the rupee against the dollar. Nikunj, you want to come in on the currency and its performance this year, and how does it shape the way one should construct our portfolio?
See, I think currency, if you look at it, if you look at the relative basis of the basket of currencies, then I think Indian rupee had been doing very well in the past, and it was holding on very well. But I think after the US tariff, I think the RBI has decided to make it slightly looser policy on the forex rate. And I think I would say devaluation of rupee, I would say it's more of a desired kind of outcome rather than the unintended. So I think it's intended outfall. Because to help the domestic economy to look at the exports. So I would say rupee, if stays around 88 to 90 band, it is still good for the economy.
Surprising, right, Ritu? Considering that we got the strong Q2 GDP print, you would have thought that would provide some strength to the Indian currency, but that's not the way it's played out.
No, not at all. And in fact, we need to see, what's behind that kind of a slip that we're seeing now. Nikunj, finally just also to get a sense of what triggers positive or negative, you expect will play out for the remainder of the fiscal by FY26? With what we've heard on the trade deal front as well, how that, of course, will impact the broader macros.
See, if you look at the recent announcement of the labor code, I think that reduces income in the hands of the means wage earners, and B, for corporates, the cost of labor will go up. In a slightly smaller manner, but that may reduce the consumption in the immediate future. But if you look at the longer term, say 6 to 9 months kind of a view, I think it will rebound. Secondly, there's a pay commission announcement expected that will again provide a huge trigger. Then the other thing is that come CY26, we see earning upgrade cycle happening for the Indian corporates. So I think that will also provide a lot of comfort to the foreign investors, because till date we were seeing earning downgrades. Now, when the earning upgrade cycle starts happening, then the foreigners also will be keen to invest. Rupee also is at a level where perhaps foreigner will be more comfortable taking a call on INR dollar. So I think overall we are expecting CY26 to be a huge positive for the Indian equities. I think it will start from, say, February, January itself, I mean the result season of December.
The bulls would certainly be hoping so. But Nikunj, thank you for sparing time and joining us. By the way, the fall on the rupee now continues.